and welcome to Pricing College with your hosts, Aidan Campbell
and Joanna Wells.
In today's episode, we want to really dig into a very common question about revenue management. It's the classic idea that can you really sell the last seat on an airplane for $1 and be profitable? This is the concept where you come running up to the flight's about to leave. It's just about to leave the gate. You come running up to the desk and say, "Can I buy a ticket?" And the question is, what price could they sell that ticket at and be justified and be profitable?
It's a good scenario to think about, and actually we've asked a lot of analysts, pricing analysts, revenue analysts, this very same question, and a lot of them have said no, it wouldn't be profitable. But really, is that the case?
I think fundamentally the question we're asking here is how much money can you make? What's the most profitable price you can sell that ticket for? Obviously, if somebody comes running up and they're willing to pay $1,000 for it, yeah, sell it for $1,000. But if they're not, there is a price that you could charge them that would be much lower than the standard price potentially, if you could just sell it and just make a few extra dollars. The other thing to bear in mind here is that you would probably, are there additional costs? I suppose the two things I'd look at, are there additional costs in selling that ticket to that person? Are they bringing a lot of luggage with them? Is it going to be extra heavy? Are they going to consume food and drinks that would have a real cost that wouldn't have been consumed on the plane otherwise? And would it take extra fuel to fly this person? All those things, let's assume a few dollars here and there, but broadly speaking, not a huge amount. So you'd obviously want the amount, the dollar price to cover that amount. And just the other thing I'd really think about is, in any way, shape, or form, if people know that they can buy tickets at rock bottom prices at the last minute, would it cannibalize, your actual normal sales? Would people not book tickets and just chance their arm, rather than buying $1,000 ticket, would they just chance their arm and turn up at the gate, 10 minutes before takeoff and go, here, I've got $10 in my pocket?
Yeah, I suppose those are all the key risks you'd have to factor in, especially if you're offering, last minute flights for $1, that there's kind of high risk for future sales. But thinking about that actual scenario in terms of for what it is, the plane is about to leave, it's already scheduled to go. The company's made a commitment to fly their plane. People are on the plane and you just happen to turn up last minute. Yeah, for sure. If there's no one else ready to book and you're selling it for $1, it's still at a profit because they wouldn't have got that $1 had you not have gone to the airline at that point in time. So it's all about timing. It's about customer segmentation. And it's about, where you are at that point in time, what the strategy is of the airline. Are they willing, the price parameters of their strategy? What are their price bands? Are they willing to go over or under those price bands to get that sale? And this is all involved in strategic price setting and what a pricing manager should really contemplate. And as Aidan identified those key risks, you've got to cover your costs. You've got to ensure that any price point isn't going to cannibalize future sales. But are you thinking now in terms of making immediate revenue, or are you thinking sustainably about making profitable revenue growth in a safe way over the 3, 6, 9 month period and further?
Yeah, I think there's two other things I'd probably add about it, really. If you think about it, it's almost like a time expiring product. So it's almost like, once the door on that plane is closed and it pulls away from the gate, it's expired. You cannot sell that product, i.e. the seat. You can't sell it again. So in theory, it's a bit like food that's expiring or any item. Once it's like you go into a supermarket. If you go into a supermarket in the evening, often you might get great discounts on some of the food, but you have to consume it that day for it's passing its expiry date. So in reality, that's the way to think about the seat. The other thing I'd say that might make it more clear to people that it would be profitable to really discount. Think about a business class seat. So say a business class seat might generally be sold for $5,000, and if somebody turns up with a minute to go and they're willing to pay $3,000, it's a huge discount. But it's still obviously very profitable to the company, to the airline. Clearly, it's just money that they wouldn't have had, and it would easily cover the costs, the additional weight, etc., of that person. So it makes a lot of sense. The big thing to watch out for, would it lower the quality? If people knew that in business class that other people were coming in and getting a much reduced price than they were? Would it annoy them? Would it stop them? Would it almost think, oh, they're being penalised for booking early? They're being penalised for being loyal customers versus this last minute person who just turns up. So those aspects you'd have to consider, but ignoring all those, it could make perfect sense.
Yeah, and I suppose that's what you've got to think of. Your brand your brand equity when you're setting prices and changing prices as part of our dynamic pricing strategy. And obviously, on top of that, that's going to be regulations and certain things that you can and cannot do. Maybe that isn't possible to do it sort of that low in the airlines industry, but it's a scenario to think about. And I think there's a lot of businesses like lastminute.com that have really taken that idea of selling perishable goods at sort of a later date, last minute, to really make the most of inventory at a profitable price point. So obviously it's a concept that has done extremely well for businesses.
Yeah, and I suppose it really is the bread and butter of revenue management. They're trying to maximize revenue for capacity constrained services, and so this is like a classic example. The other thing you'd really be saying, a business or an airline, it should hopefully be selling all their seats. Otherwise, maybe their price is set too high, or they've got some other problem. So in reality, this should not be every day. There should be, you'd hope to be aiming for 100% capacity on that flight. And if there was if people knew that there was a very high chance they would get that ticket, then it would start causing problems. So obviously, the person willing to turn up and pay $3,000, they've got that cash in their pocket, but at the same time, they'd also have to be willing to accept a lot of volatility. There's a high chance they could be stuck at the airport that night. So, in some way, would you rather spend $5,000 and know you're like a business person and know you'd make your meeting on the Monday morning, or spend $3,000 and be stuck in an airport over the weekend? So, there's a certain type of person that would, in theory, buy that ticket. It probably isn't actually, as common as you might imagine.
So I suppose to really know if a dynamic pricing strategy is correct for your business, because a lot of other businesses outside the airlines industry are thinking about dynamic pricing, revenue management. I think a key recommendation would really be to diagnose your business, your commercial situation right now. Think about your customer segments, think about your brand and price positioning in the market, and then really test the pricing parameters of your current pricing model. Are they updated? Can you move the price ceiling? Are the price floors correct? And then start to test different price points just to see at what levels you're getting more volume at more profitable price points and vice versa. And I think all of this requires a good firm understanding of your pricing system, and that requires some diagnostics.
Yeah, I think that's it from me. I think we're going to leave it with a call out whereby we're asking people if they would like to get analytics on their business or their career. Reach out to us at taylorwells.com.au and sign up, and you'll take advantage of that offer.
Yeah, it's quite easy to do. So you just go to our homepage, taylorwells.com.au, and click, get your free pricing audit today, and everything else will be, and just book in. Easy as that.
Yeah, we look forward to speaking to you. Have a great day.
Yeah, thanks a lot.